Tucker, good to have you with us on the show. The numbers, better than what the street was expecting, but it's lower than a year ago. What do you make of the results?
I think the key thing to start with is that China Telecom is still principally a fixed line business. While people are focused on the mobile subscriber growth as excitement, the underlying earnings are still driven by fixed line, and the Chinese fixed line space is in free fall. We see a huge migration of traffic from fixed to mobile, and the first quarter numbers were actually worse than the fourth quarter numbers in terms of that fixed to mobile cannibalization. We're cutting our earnings numbers for 2010 by 18% and 2012 by 12%, reflecting a worse than expected fixed line environment.
Why aren't you cheered by what the chairman said? I mean, Chairman Wang Xiaochu, he's forecasting the company's first increase in annual profit this year.
Well, again, I would agree the outlook is improving. We have to keep in mind that net profit collapsed by 33% last year. So while China Telecom is experiencing a rebound, it's off of a very low base. I think it's also important to emphasize in terms of competitive dynamics, it's very difficult for China Telecom and China Unicom to take share from China Mobile without spending on subsidies. So while the market is enthusiastic about a reduction in sales and marketing costs, we need to really understand if they'll be able to change their market structure and market position without making those investments.
Okay, look at China Telecom shares, best performing Chinese telco this year. What's crucial for further strength and for you to revise up your call from the current neutral?
I think the key for us is going to be the regulatory environment, particularly the timing of the introduction of mobile number portability. This allows customers to switch operators and keep their number. China Mobile dominates the high end of the market in China. The top roughly 100 million Chinese wireless customers are principally using China Mobile. If China Telecom can attract those customers away from China Mobile, then we move towards a more optimistic view. They're doing a very good job on bundling fixed and mobile services. Already 50% of their wireless subscribers are buying a package.
You talked about how the wireless business is in free fall, but the company is taking steps to address that. Don't you think it has been successful so far?
I would say they've made some progress in terms of the wireline business, but certainly their comments have suggested even they are surprised by how quickly this transition has taken place. If you talk to other global operators, they would say when wireless prices are below wireline prices, this movement of traffic is very difficult to stop. So while China Telecom has a very good broadband business, wireline represents 100% of EBITDA today, and really understanding the structural shift in wireline traffic, we have a difficult time believing there's much they can do to manage that transition.
If we take it a step further and look at the telco sector as a whole, you have a negative outlook on the industry. You expect earnings to be under pressure. What do we do now? Do we stay away from Chinese telcos, or are there opportunities to be had?
We would advise investors to take a cautious sort of long-term view on the Chinese telco stocks. There's certainly going to be trading opportunities. People do get excited about lower sales and marketing costs and the monthly subscriber numbers. I think the key thing to remember is the transition to 3G is difficult, expensive, and painful. Other operators, including Hutchison, went through this transition, and it didn't really yield results for the telcos for a few years. We have a strong preference for the Chinese equipment vendors, such as Huawei, ZTE, Kamba, and also the China internet stocks. Of the three sectors, we think internet looks the most attractive as it's the least geared to government technology policy and interference essentially from the government in how the private sector companies run their businesses.
How much more upside for those telecom equipment companies that you like?
Well, we just downgraded ZTE to neutral because of concerns on margin pressure, particularly on handsets. But they've emphasized potential upside in the second half for both increases in 3G capex as well as China convergence capex. That's not in our numbers. ZTE is the fastest growing listed vendor in the world. Kamba is a smaller player we like in the microwave space. It's mostly China, growing internationally. My favorite of the internet stocks is Tencent, which is essentially a diversified play on the entire Chinese internet space. It's the #1 player in gaming, social networking, and value-added services, and is moving into advertising.
Okay, Tucker Grinnan, HSBC, betting on Tencent. Thank you so much for your insights on the trade today.